Check this out. This is a chart I recently ran across on Facebook, which is showing the underperformance of Berkshire Hathaway stock relative to the S&P 500 since Buffett announced his resignation as CEO. And the post calls it out as underperforming the S&P 500 by more than 20 percentage points. That is a substantial underperformance. So I wanted to unpack this and what is happening with the valuation of Berkshire Hathaway stock and share my quick take on things, because interestingly enough, I actually made a video at the end of Q1 2025, right now it's July 10th, 2025, on Berkshire Hathaway and covering where Buffett is finding this alpha, because in the beginning of 2025, Q1, Berkshire Hathaway was on a rip roar. Let's just go here to the Morningstar chart, and I've got the S&P 500 on here, represented by Vanguard's S&P 500 mutual fund, ticker symbol VFINX, and Berkshire Hathaway Class B shares. And I've got it set for year to date as the time period. So if we look at the end of Q1, Berkshire Hathaway was just on a rip roar up at the same time as all of the kind of tariff kerfuffle was going on and all this stuff was hitting the market and things were kind of slipping down and price performance at least was starting to drop. All right, so Berkshire Hathaway was doing quite well. And in analyzing things, what I ultimately determined and shared in that video was that the increase in price and the performance of Berkshire Hathaway stock was not due to the underlying fundamentals. The underlying fundamentals were still being impacted by the same things that were broadly impacting the S&P 500, but it was in a little bit of a bubble, and this is what was causing the problem. Investors, or I shouldn't say causing the problem, right? I don't like to be fear-mongering. There's not really a problem. This is just normal market behavior. But investors were really piling their money into Berkshire Hathaway without regard to the underlying fundamentals, and this was made evident through the price to book ratio of Berkshire Hathaway. So if we look at this chart here of price to book, I mean, we can see, coming from a low in the COVID days of 1.09 right up to the end of Q1 2025, the price to book had gone from 1.09 to 1.73. It had just, gone up and up and up. So the price to book, the price of the stock relative to the book value of the assets, had just increased. And this is reflective of investors just dumping their money into it. They weren't looking at the book value of the holdings, which Buffett has said that Berkshire should trade at close to book value or maybe a slight premium. And I think he has said that if it is less than a book value of 1.2, he and Berkshire Hathaway would be repurchasing shares of Berkshire. They'd consider that a good or fair value. But anyways, at the end of Q1 2025, the book value was way beyond that. So we had seen this inflation, like a little mini bubble in Berkshire Hathaway. And since then, things have tapered off. I don't think that the recent decline in Berkshire Hathaway stock, since Buffett announced his retirement there in what would be early May, is the result of his resignation. I don't think that has any impact on it at all, because a company of this size and with this level of investor sophistication, at least at the executive level, I think you would be naive to believe they don't have his whole methodology, documented out and nearly processed out to the point that, a computer or algorithm could almost run the show there. And I think that large-scale and institutional investors, the ones that are really moving capital and moving the needle on the stock and the amount of inflows that are coming into it and or outflows that are going out if they're simply not selling, I think that those investors certainly know that, and that is my approach to it. So him announcing a resignation or retirement would not impact anything. What we're seeing, in my opinion, is simply the fact that investors have kind of came to their senses, right? They're not looking at Berkshire Hathaway as this flight to quality. They still see it as quality. I still see Berkshire Hathaway as a very good company and a high quality company, but rather they don't need to go anywhere to find quality because they are fine in the broader market. The broad market, the S&P 500, has recovered nicely since the end of Q1 2025. Therefore, they don't need to flock to Berkshire for the quality. That's my take on it. What's your take on it? Is there something you feel like I'm missing out on? Let me know in the comments below, guys. And if you found this video helpful and insightful, you know the drill. Smash that like button to help me out in the YouTube algorithm. I am calling it a wrap and signing off on that note.